Welcome, I'm Michael Langemeyer from the Center for Commercial Agriculture. I'm here today to discuss the June 2022 Ag Economy Barometer survey results. I'm going to start with a word cloud. At the end of every survey, towards the middle of the month when the survey is conducted, we ask people for their thoughts. And so it's an open-ended question where they can share their thoughts, and then we summarize those thoughts into a word cloud. And this does a good job of illustrating the uncertainty that's out there in terms of what the survey respondents are thinking about. We see inputs, regulation, energy, costs, prices, inflation, and so the real theme here is input costs and the uncertainty related to input costs, and we'll talk more about that here on an upcoming slide. Looking at the Ag Economy Barometer itself, it dropped 2 points in June from 99 to 97. It's way below what it was earlier this year, and we'll talk more about the reasons why that is the case. Before we do that, let's look at the two sub-indices, the index of current conditions and the index of future expectations. The index of current conditions was up slightly, and the index of future expectations was down slightly, but both of those are at very low levels. In fact, the index of future expectations is at the lowest level it's been since October 2016, and just as importantly, it's lower than what it was in April and May of 2020 when COVID was really hit, and we were really looking at some uncertainty related to crop prices, and so we're at pretty low levels right now compared to where we've been. Let's dig a little deeper into that. One of the questions we ask is this one here. Would you say that your farm operation today is financially better off, worse off, or about the same compared to a year ago? And I've compared June 22 results to June 21 results, and we can see that they're much more pessimistic about the finances today than what they were last year at this time, with 49% saying that their farm is worse off this June compared to last June. If we look at the Farm Capital Investment Index, it remains at 35. It was 35 last month. This is the lowest level during the life of the survey. And essentially what the producers are saying here is this is not necessarily a good time to purchase machinery or buildings. One of the factors that's related to this index is we've been asking people about the impact of low machinery levels, and 50% of producers in June said purchase plans have been impacted by low machinery levels. Looking at farmland prices, we have two questions on farmland prices, one looking 12 months out and one looking 5 years from now. I'm focusing on the longer term farmland price expectations. And this month, 57% thought prices are going to be higher 5 years from now. That's down considerably from last fall when close to 70% thought that farmland prices would be higher 5 years from now. Also, there was a tick up in the percentage that thought we'd have lower farmland prices 5 years from now. And so certainly this is not pessimistic in terms of farmland, but it's less optimistic than what we were last fall and earlier this year. Another question that we asked this month that we asked last year at this time is this question here related to cash rents. Compared to a year ago, what are your expectations for cash rent in your area? Only 3% thought cash rent would be lower in 2023 compared to 2022. And so obviously the strong returns in 21 and expected returns in 22 is putting upward pressure on cash rents. 45% said that cash rent would be about the same, and 52% said cash rent would be higher in 2023 compared to 2022. We also asked a follow-up question of those that indicated that cash rents would be higher. A full 40% of that particular group, which would be 20% of the entire group, thought cash rents would be 10% or more higher in 2023 compared to 2022. Another question that we've been asking for the last several months is related to the biggest concern. Looking ahead, what is your biggest concern for farming operation? I want to tie this back to the relatively low Ag Economy Barometer Index. I think this chart here explains why the index is relatively low right now. They're very concerned about high input costs. Input costs have increased dramatically in 22, and they're very concerned about that continuing into 2023. The second most common answer was availability of inputs. 21% were very concerned about the availability of inputs. If we had asked that availability of input question last year, that wouldn't have even been on their radar probably. But given all the concerns we've had in the last few months about availability of herbicide, insecticide, parts, fertilizer to some extent, that is a concern of a lot of producers. Third was lower crop or livestock prices. Again, if we were go back to 2019, for example, I think lower crop or livestock prices would be way up there in terms of a biggest concern, probably over 50%. But these higher input costs and availability of inputs really points to inputs as being on people's minds and really worried about the high input costs we might be seeing next year. To look at that a little closer, we asked this question here. We've been asking this question the last 3 months. Looking ahead to crops that will be planted in 2023, what change do you expect for 2023 crop input prices compared to prices paid for 2022 crop inputs? And remember, we've seen very large increases in 2022. For example, break-even price for corn is up close to 30% in 22 compared to 21. And so this would be input prices above and beyond what we've seen in 2022. You can see that a very small percent think that input prices are actually going to decline. Only 1 out of 10 survey respondents indicated that. Another 25% said basically no change. The elevated input prices in 22 are going to remain the same, are going to remain in place. But there was a relatively large percentage of people that thought prices would increase either less than 10%, 10 to 20%, and 20% or more, with 16% in the June survey indicating that they thought input prices would increase 20% or more. And so again, that points back to why the Ag Economy Barometer is relatively low right now. It's this concern for input costs and input prices moving forward. We asked a series of questions related to winter wheat in this survey just to get some feel for planting intentions related to winter wheat. Winter wheat prices are very high right now, and so we wanted to get a feel for how this might be impacting people's thoughts to what they might do this fall. And so we asked this question of individuals that grew corn, soybeans, wheat, or cotton. And the question is, did you plant winter wheat in the fall of 21? 31% said yes. And then we had a follow-up question for that group. Do you plan to increase your winter wheat acreage in fall 22 compared to fall 21? This question was posed to those who grew winter wheat in 21, so that group that grew winter wheat in 21, and 24% said yes. That might not seem like a very big percent, but it really is. That would be a rather large increase in winter wheat acreage if those people would produce more winter wheat acres in the fall of 22. And so we're trying to get a feel for the response to the higher wheat prices that we're seeing right now. We also asked a question related to the same issue for people that did not grow winter wheat. And so, do you intend to plant winter wheat in the fall of 22? This is for people who did not grow winter wheat in 21. 14% of those said yes. Again, that's a relatively high percent. If we'd asked this question last year, it wouldn't have been 14%. It'd have been something much smaller than that in my mind. And so 14% of those that didn't grow wheat last year are thinking about growing wheat or planting wheat in the fall of 2022. And so again, a rather big response to the higher wheat prices. This concludes my brief summary of the June Purdue CME Group Ag Economy Barometer. More information can be found on the Ag Economy Barometer website, as well as the website for the Center for Commercial Agriculture.